Welcome to the Rogue Trading Communities video, and this video is about reversal trading methods using market structure and Wyckoff schematics. Let's understand what is reversal in trading. Now, in simple, a reversal is nothing but, let's assume you are having an uptrend, right? At some point of time, if market decides to change its position or it decides to change its trend from an uptrend to a downtrend, and that is called a reversal in trading. Okay, and this is same thing vice versa in a downtrend as well, right? When you have a downtrend, right, when market decides like, okay, fine, the downtrend is over and the uptrend starts from a certain location, and this point is actually called reversal in trading. Okay, it's as simple as that. This is one way of reversal. The another way of reversals, if you have observed in the market, let's say you have some kind of a, let's say, down move, okay, and after you have the sideways market, assuming obviously sideways markets are the most common thing one could have seen in a charts out there, right? So even in a sideways market, you might have observed price keeps bouncing from support to resistance, again resistance to support, support to resistance, and resistance to support. This cycle keeps continuing until unless it either breaks towards the higher side or it breaks towards the lower side, and in any one thing happens eventually, right? But if you observe every single point, when market goes to that resistance or when market comes back to that support, it gives you that reversals also. That bounce is also considered to be reversals in the market. Okay, so please understand it, because this is where you have to focus on. Okay, now when we talk about this factors, right, we have to understand a simple concept on locations of reversal. Now what do I mean by that? Well, reversals are not random. In fact, when we talk about a reversal, let's say we have a chart right here, right? See, market was in a down move, right? And now market created the reversal point and started creating that up move right here. This reversal is not random actually. This could be some kind of a higher time frames support, right? So that is the ultimate reason market would have created that down move and then started creating that up move right here, right? So this could be a lower time frame. So time frame integration plays a crucial role when it comes to finding the location of the reversal. Now what do I mean by that? I'm going to explain it, don't worry about it. I'm going from the very basics, and I'm going to show you multiple examples, and in fact I'm going to also show you some traits that I have taken in the community so that you can understand how you can actually and effectively trade reversals in the market. Okay, let's get started. Now, before finding the location of the reversals, first we have to understand the very basics of market structure. Now, what do I mean by that? Well, market's price is not random. It has a structure. Okay, so I've given an example of an uptrend right here. So, an uptrend consists of higher highs and higher lows, right? It consists of higher highs and higher lows. Those higher highs and higher lows can be implemented as impulse and correctives, right? From a higher low to higher high is considered to be an impulse. From higher high to higher low is considered to be a corrective. And again, from higher low to higher high is considered to be an impulse. And this cycle continues until unless there is strength in the markets. Market keeps creating that momentum. This is an uptrend example, but this can be vice versa. For lower high to lower low will be considered as a impulse, and lower low to lower high and corrective, etc., etc. Because basics of market structure is something I have already spoken about in a video called Multiple Time Frame Analysis Part 1. Link will be in the description for it. Please go ahead and check it out. Okay. Now, if you know the very basics of market structure, we have to understand what are the locations of reversal. Why do I keep the basics of market structure for a reversal? Let's assume it. Okay, now let's say you have a daily time frame right here. Assuming, let's say you have an uptrend right here. This is an impulse, corrective, and impulse, and you are looking at a point at the end of a corrective. Now what do I mean by that? Well, this down move on the corrective part is just a uptrend's corrective. But ultimately, if you switch to a lower time frame, like a 5-minute time frame or a 15-minute time frame or a 1-minute time frame, that will be completely a downtrend. it will be consist of lower highs and lower lows. So if you look into a lower time frame, it will be completely in a downtrend scenario. That downtrend's end is what you're looking at it. So you need some kind of a confirmations right there to take the trades out there. Okay, you need some kind of a confirmation to identify the reversal points, and based on that you can identify this to capture the momentum which you're about to get of this particular impulse cycle. I hope you're trying to understand. Okay, this is a theoretical part, but let me show you that with examples so that you guys can understand this. Okay, now let's get started. You see, I have this chart right here, Bharti Airtel Limited. Okay, this is a daily time frame. As you can see in this video, market is creating an uptrend, right? Clear cut, but an impulse right here, right? A higher high, higher low, and this is a higher high. Where do you think the right location for us to execute a trade? Exactly at the higher low right here. This is a point that we can actually execute a trade. In fact, we had multiple higher highs and higher lows. Just focus on this area right here at this point of time. Okay. So technically, as you can see in the daily time frame, it's just one small swing towards the lower side. And I have already explained the concept of angular correctives and horizontal correctives, right? So this is a angular corrective. Market created the down move right here. That down move in a daily time frame is just a one small swing. But if you go to a lower time frame, like a 5-minute time frame, look, it was a complete downtrend, right? It was a complete downtrend, right? And this downtrend's reversal point is where you're looking for an opportunity to capture this move. This is the point. The end of this downtrend on a lower time frame is where you're looking for the opportunity to capture the further momentum actually. And this is applicable on any time frames. I'm giving you an example on daily. You can take your higher time frame as a hourly time frame. You can look for, if you go to 1-minute time frame, you will get some kind of a reversal points at a 1-minute or a 5-minute time frames. And based on that also, you can find a reversal, right? Now here, obviously, as you know, that we have been making content around Wyckoff schematics. So our approach is completely based on Wyckoff schematics. Why? Because we trade the 4 phases of the market. Now what do I mean by that? Well, I have already made a video about the 4 phases of the market, the very basics to understand what are the 4 phases. Link will be in the description for it. Go ahead and check it out if you don't know about it. Okay, so technically after a downtrend, we're gonna get an accumulation zone right here, and that is what I'll be looking at it. I always wait for some kind of a consolidation on the end of a corrective to identify my opportunities. Now see here at this point of time, you see there was some kind of a consolidation at this point, right? If I zoom in a little bit, this is the schematic that I have, a clear-cut consolidation. I can honestly say that yes, it's a good consolidation, it's a good accumulation schematic. Kind of a little bit volatile at this section, market drastically went down, but again came back inside my value area, right? Again consolidated, then finally created that breakout, and we had this last point of supply and started creating a momentum right here. Now, if you had identified that reversal point using Wyckoff schematic or even using market structure, this would have been your results actually, right? You could have easily captured this momentum if you find the reversals the right way. Okay. Now I'm going to give you one more example. Look here. This is Bajaj Auto Limited. Okay. Take an example of this leg right here. Okay. You have an impulse, you have a corrective, and you have an impulse. A clear-cut angular corrective. That angular corrective on a higher time frame is just a one small swing. But in a lower time frame, it's a completely a downtrend. The same swing right here, what I showed you right here, it's the same move, it's the same area. In a downtrend, it's a completely lower low, lower high momentum. And see, at the end of that, you're getting that consolidation, right? You have this consolidation right here, right? Clear-cut market consolidated, right? And you see, while market is breaking these level, you had this volume divergence as well, right? And see the momentum. I'm giving you multiple examples right here. That's it. So that you can understand it, right? Let me show you one more example. Look here. Britannia Industries, clearly an uptrend, like an impulse, corrective, impulse, corrective, impulse. I'm pretty sure every single point here, 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 every single point can be identified using Wyckoff schematics. And that's what I'm trying to show right here. Okay, let's focus on this point right here. You had an impulse, this buying tail indicating a weakness in the market with a high volume activity. Then market came down in the form of a corrective. That down move is just a small swing on a higher time frame, but that's an overall downtrend in a lower time frame, which consists of lower highs, lower low, right? Clearly, market is creating that down move, right? Obviously, but here as market reached at some point, market went into consolidation, right? That consolidation, if you observe carefully here, market had its consolidation and then created that momentum towards the higher side. Then after that momentum, you had this structure right here, this Wyckoff structure. Okay, and that Wyckoff structure gave a breakout right here, retracement, bounce. Look, clear cut. I mean, I'm actually showing you some examples right here. There is a method to trade reversals. We will talk about it a lot, but this video is only an introduction video to reversals actually. I'm going to make more video about reversals in the upcoming days. I'm going to show exact points what you have to do. But I hope you're getting an idea right here just by looking at these charts. Reversals trades, when you look for a location for a reversal trade, a higher time frames end of a corrective is the best place to look for a lower time frame reversal trades. This is your answer for reversal trading. Okay. So whenever you have a higher time frame trend, a lower time frame reversal trade is the high probability one. Why? Because you have the power of a higher time frame. Higher time frame is already a trend. So constantly buyers are the one who are entering the market. So you should be willing to take the trades based on the higher time frame trend. Now, how can we trade a sideways market trend? What do I mean by that? Well, let's say you have a downtrend or an uptrend, anything, okay, and market went into a sideways. So this is where someone will be actually looking for a breakout, and then one could look for an opportunity to capture the reversal. That is one way that we know for a fact. Now we have seen multiple images about the Wyckoff schematic right now in the examples. Now, what if I tell you that you can actually take the trades from the support to resistance and resistance to support? Now, what do I mean by that? Well, as you know, when market stays in a certain sideways range, market keeps bouncing from resistance to again support, and this bounce keeps continuing until and unless the accumulation phase gets completed. And then finally market breaks towards the higher side or lower side and resumes its further trend. Okay, so this is one way. But if I tell you that you can capture the reversal points of this sideways market, would you believe it? Well, it is possible. It is possible using Wyckoff schematic, a major and the micro Wyckoff schematics. Well, let me show you a trade that I have taken recently, and I have also shared an explanation video in the group, in the private community. Let me share that with you guys. So this is the Rogue Trading Community's private Telegram channel for members who have completed my one-to-one mentorship, right? So here, usually when I take trades and when I have to teach something, whenever there is a new concept that gets, introduced, I first upload it to them so that they keep, up to date, so that they can trade efficiently actually. Because, this is a group where constantly there are people who have joined 3-4 years ago. They're still in the community. They constantly keep trading in the markets. That's how the entire community goes on, right? And recently also I have released a scanner for them so that within one click they can easily scan all Nifty 100, 200, even the 500 stocks immediately within one click, so that they can identify these kind of reversal opportunities out there. On November 4th, I have taken a trade in a stock called Naukri, which is listed on National Stock Exchange, India. Okay. Now, in this talk, what was the setup? Let's understand that. So this was the scenario. Okay. So as you can see right here, I've made an entire 20 minutes video specifically I explained everything to them in depth about it. And there are a lot of concepts here that I wish I could share it in the in the YouTube channel, but unfortunately it takes a lot of time for me to cover from the very basics. So we will do it one more time. But as of now, observe carefully. Here, this was in a consolidation, right? This consolidation, this was a selling climax, AR, secondary test, and upthrust. Market came up to this point. So the market reached that support area right here. Market ended at this area, right, on 31st. And now, when November started, right? So on that particular point of time, I had a thought process like, yes, this could be a reversal point. So let me look for opportunities on the lower time frame, right? That's what my initial intention. Let me show this in the charts right now. Okay. So this was the overall structure of that particular point of time. So market reached at this point, and you see I've changed it to 15-minute time frames. That was a 1 hour time frame, actually nothing much. You see here market went into some kind of a consolidation. Observe carefully. And this is what I was looking into it. Let's go to a lower time frame at the same point so that you guys can understand what kind of trade I have taken right here. So now as you can see right here, market came to the support area, right? After creating that down move, see it's a complete downtrend in the lower time frame, right? After it came back to that support area, market started creating that consolidation, right? This consolidation could be an accumulation zone or it could be a redistribution zone, and market could go down, right? Since we have a consolidation, either it could breaks towards the higher side, indicating this could be an accumulation zone. Let me, kind of like look for buy opportunities. If market further went down right here, I could have also gone for a sell opportunity. Anything is possible right here. But ultimately, the overall higher time frame was in an uptrend. I knew that buyer's pressure is there. So anyways, I was only looking for a buy opportunity. And let me label the, Wyckoff for you guys right here. Now look, does it make sense? Clear-cut consolidation. We had our Wyckoff cycle clearly. And finally, after the spring, market was creating that momentum. And here, as soon as market was creating that breakout, we executed a trade. Let me show the, the order book right here. So I think I've shared. Yeah. So here, as you can see, this trade was taken on 4th of November, right? And around 9:49, initially I executed 50% of my quantities at 7478. That is around this point, I guess. 7478. Yeah, here at this section, I've executed 50% quantities. Then market created that momentum, because even before, sometimes what happens is we get that kind of confirmations where even before a breakout we get to know that this is about to be an accumulation zone. This is about to be about to give us a breakout. So what we usually do is we execute 50% quantities even before market is giving us the breakout. And as market broke this level, and again I've executed 50% quantities at $7,512 right here. That was around this point, 7,512. Yeah, at the break of this creek right here. Okay, this creek and this particular creek. So we have taken 50% quantities, and this is what happens. And look at the momentum right here, guys. Beauty. This move is what we wanted to capture to the higher time frames resistance, and that's what we did right here. I think we booked around 1:6 right here, right? That's what I shared it in the community. 1:6 ratio. That was a 3.50% move in that stock for the day, right? It was already on the top gainers and so on, right? So this was the momentum we actually captured in this particular stock, right? So I hope you got an idea about how we actually trade based on, a Wyckoff schematics, based on market structure, right? This is possible if you truly understand what you're doing in the markets. Okay. So that's it for this video. I hope you got some kind of an idea about it. In fact, this is only an introduction video about the reversals. We're going to make one more video in the upcoming days so that you guys can understand exactly how to take a trade, what could be the entry criterias and all these things. And yeah,
See you in the next video. Goodbye and have a great day.